What's up, family? It's your boy Jalen here with Black Earth Renaissance with another episode of Explain. What's a stock split? Let's get right on into it. A stock split is whenever a company takes its existing shares and they divide it into new shares to boost the stock's liquidity. So, a quick example would be Amazon being traded at $3,400 per share, roughly around that, give or take. If Amazon were to do a 3-for-1 share, they would take that one share and divide it by 3. So 3,400 divided by 3, and you would get around $1,100 per share, give or take a little bit more. And what that would do is that would open up a market for new investors who are able to afford that price. So instead of the company just having a very high stock, now you can have new investors who can pay $1,000 per share and start buying it, and in return, it will raise the value of that stock. And whenever a stock splits, it doesn't add value to it initially. Their whole goal is to get more value. But if a company just splits that same price, that same share, the company's still going to be worth that. So I'll give you another example. Say you take a company that has 10 million shares and it's worth $100 per share. If you do 10 million shares times $100, that would give that company a valuation of $1 billion. So let's take this same company and give it a 2-for-1 split. So now that company would have 20 million shares, but the share price would decrease to $50. So if you do 20 million times $50, that still gives you that $1 billion valuation. Now, this is how the companies want to increase it. With that share price being $50, they're expecting more people to be able to afford the stock at $50. So now if you were to start purchasing more shares at $50, it would start to rise, the stock price would go up, and instead of being $50, it could probably go up to $60, and now you're increasing the valuation of that company. And here are some of the common ratios that most companies will split. You'll do a 2-for-1, a 3-for-1. Back in the day, Apple did a 7-for-1 split. It really just all depends on what the company would like to do and what the board of directors is comfortable with. But 9 times out of 10, you can really do any type of stock split, any number. It's really just taking that stock, dividing it, making more shares. Let us know if this video was helpful. Be on the lookout for more, and I'll be back. This is Jalen with Black Wealth Renaissance, signing out. Peace.